What's up, everyone? It's Scotty with Money Investing, and what a day for the markets. What a day for tech stocks, really. I mean, we had, on the back of Meta, we had a lot of even big tech companies, small tech companies, and the entire market getting a huge lift to the upside, and the S&P and the NASDAQ are now reapproaching, I should say, back up to that resistance level, which again is going to be a big battleground for both the bulls and the bears. So hope you guys are doing great. If you guys enjoy this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. The 16% annual discount does expire now in 2 days. So if you want to get access to all the buy and sell alerts, options alerts, trade ideas, everything's included, including the private live streams that we're doing 3 days a week and private videos. Link's going to be down below. So this right here is the main watch list and the 7 big tech or large cap tech stocks here. Nvidia up 1%, Netflix up 1.4%, AMD pushing higher. So we did see a little bit of momentum back up for semis. Apple here up almost 3%, getting up to 168. Microsoft continuing on that momentum, now back over $304, up 3.2%. Google up 3.75%. Tesla finally rebounding a little bit, up over 4%. Amazon 4.6%, although after hours, after the earnings, slightly down 2%. It was much higher. It was trading as high as $123, so it was up 10% at one point, but then ended up selling off. And Meta, of course, after the earnings, was up almost 14%. At one point, this number was also at 17%. It was up like trading as much as $241, $242, but it settled in at just over $238. So needless to say that it was a very, 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 very green day for the markets. A lot of big tech names, a lot of industrials, real estate, materials, utilities, financials, defensive, staples, technology, everything was charging higher. AbbVie was down close to 8% on earnings. I did a very quick fair value calculation in our Discord for this particular stock. So again, if you're interested, you can take a look at that in our private chat. But again, the entire market here very much green and pushing higher, with communication services, real estate, consumer cyclicals, all of them kind of leading the way. And in the last 1 week, we have comm services, consumer defensive, and real estate pushing higher, other sectors pulling down. And in the last 1 month, almost all 11 sectors in the S&P 500 are green. Now, we did also have the GDP numbers come out. Jobless claims came in a little bit shy of expectations. I think they ended up at around 230,000. And when we look at the GDP numbers, they came in at 1.1% growth, which was a little bit shy of what the consensus was at 2%. So, this might have also created some bullishness in the market because of a softer increase in the economic growth here, which results in the Federal Reserve also potentially pulling back faster or cutting rates. Again, it's all down to what interest rate expectations are going to look like in the future, and thereby how the economy and earnings are going to shake out for the remainder of 2023. So right now, we do have the Fed meeting on May 3rd. The probability is still pretty high for another 25 basis points increase. That's another 85%. But eventually the market's pricing in significant cuts rest of 2023 all the way going through 2024. Now, sugar prices, soybean, copper, volatility were all pushing higher, with cocoa, orange juice, coffee, and lumber prices pulling back. Bitcoin just a little bit over 29,400, Ether just over 1,900. They were both higher, so a little bit of a risk-on type environment for the market, needless to say. So before we jump into the markets here, crude oil back under $75. That's only going to help inflation moving forward. The pressures are going to be taken off of inflation because energy prices are a big component of overall CPI, not in a direct sense, but more in an indirect sense, because everything we pretty much use, eat, and do are pretty much serviced or transported on oil or petrol, right? So it's very important for us to understand where crude oil ends up going. If it's going higher, it's going to put additional pressure on inflation for food prices, for different materials, different services, different things that we use on a regular basis. But if oil prices are going down, that's going to have an inverse effect. So that's good. Right now, trading at support at $73, $74 per barrel. So this right here is going to be that level to watch for crude oil. Bitcoin here, once again, seeing a little bit of momentum. So we're starting to push right back up. And again, that resistance is going to be roughly around 30,000. So this right here is going to be that intermediate, more near-term resistance where we have gotten rejected more recently. And support level is going to stay put roughly around here at close to 28,000. So right now we're moving back up. It's going to be quite interesting whether we get a breakout past this level or if we get another rejection for Bitcoin. Ether back up to almost 1900, and again, resistance is actually going to be over here at 2200, all the way up to as much as 2300 for Ethereum, with the support sitting right over here at roughly around 1800 for Ether. Now, talking about the markets, before we get there, volatility here absolutely getting crushed out over 9.6%. as the markets continue to push higher. And VXN, which is a more NASDAQ 100 volatility, was also down over 7.5%, coming down to 21, so coming down to really, really low levels. So as the volatility continues to get crushed, we are seeing, of course, the markets with a very, very strong day on the day today. So moving over to the 10-year yields very quickly. We did see the 10-year yields here starting to roll right back down a little bit. Well, actually, they did push higher intraday, and then right now they're flat. So we are back over 3.5%. So we are seeing a little bit of momentum back to the upside for the 10-year yields, and the spread is still pretty inverted at close to negative 55 basis points for the 10-year versus the 3-month. And if you take a look at the 10-year versus the 2-year, we are also negative still at close to negative 55 basis points at the moment. Now, talking about the S&P 500, we are once again back inside this red rectangle. In fact, the last couple days, we were seeing some selling pressure. We were down quite a bit. Even yesterday's Microsoft's earnings and Google's earnings was not enough to keep the markets afloat. Who would have thought it would have been Meta to the rescue? Meta to the rescue, coming in and kind of lifting the entire market higher. And as a result, we've got the S&P once again inside this bear camp, inside this red rectangle, which is going to be very, very interesting and going to be quite important for us to see whether we get a breakout or a rejection. Now, you know, not very often you actually see the markets kind of roll over, and then usually you see that continuation for the markets and for us to continue to see some more downside. But in this case, because of the earnings being the catalyst, we're starting to see a big U-turn for the market, and S&P almost up 2%, back up to 4,100. So again, keep a close eye at these levels. Next week is just as important, if not more important than this week, because we've got Apple, we've got lots of other companies, big tech included, and then not to mention the Fed meeting also coming out. May 3rd is when the Federal Reserve is going to raise rates and guide us for the future. So it's possible that we do see some more momentum inside this red rectangle and eventually get a much bigger, much decisive reaction from the market, whether we get a breakout or once again a rejection. Now, the rejection probabilities are diminishing, and the reason is because the more we hang out around here, the more the news comes in, you know, it's going to be perceived as a little bit more better than expected because expectations are so low. The more the probability for us to break to the upside past 4,200 and get up to 4,330. That's going to be that next target and that next resistance to watch. Same thing with the NASDAQ. We're once again getting another retest here inside this bear camp, inside this red rectangle that we have talked about. It's going to be sitting roughly at 12,280. So this right here, again, is going to be that resistance to watch for the NASDAQ. We were consolidating sideways for weeks before finally selling off and pulling back. And today we're seeing a big move to the upside, up over 2.4%. So really that resistance is going to be the one to watch on Friday, on Monday, Tuesday next week, and for us to see whether we get a breakout or a rejection. Now, the probability, like I said, for a breakout are increasing as the markets go up there for yet another retest and to kind of test the waters, test the bears once again. Talking about Apple here, and Apple on the day with a very nice move to the upside, up over 2.8%, 168. So next target's going to be all the way up to 177. It is moving higher prior to the earnings. I'm not super confident with the earnings going into Apple, considering the pre-earnings run-up, the MacBook sales that we learned about, the volume declining in this entire rally. So you can see the volume has really been coming down while this rally's been moving higher, or while the stock price has been moving higher. And then, of course, you know, there's expectations that earnings right now pegged at $1.40. And this is going to be for the period ending in March. So if you go back 4 quarters, they reported $1.52. So they are expected to report a decline in earnings on a year-over-year basis, which is pretty much the norm for this earnings season. So resistance is going to stay up at 177 for Apple, and support levels at 157, 158. Talking about Amazon. And Amazon after hours was quite volatile, got up to as much as 123. We had a resistance at close to 114, 115, so that's going to be in line with this previous resistance. So we weren't able to hold up to those levels for very long. In fact, on the 5-minute chart, you'll notice that we pushed higher in the first 5 minutes on that beat, on both EPS coming in at 31 cents, revenue coming at 127 billion, so very strong numbers. But I'll take a look at this company. I'll take a look at the earnings that they reported, and of course go over that in more detail. And do like a separate video on them in the future. But this right here was the entire selling off after hours. So from $123 back down to 105, and 15% pretty much wiped out from Amazon's market cap just like that. So right now, pre-market, we could expect a little bit of a gap down, 2%, but really for the most part, we're just going to be consolidating sideways between 104 and 115 as their resistance for Amazon. Talking about Tesla here, Tesla getting a very, very nice bounce back higher. So we are getting a little bit of a rebound, and slowly and steadily, I feel like we're filling in this gap. So we were lower at one point. I do still think or believe that if Tesla continues to fall further, it's possible that we come down to this 0.618 fib retracement level, and that's going to be in line with this gap fill at close to 145, 146. So that's the support level that I could see Tesla come down to at the most. And then, of course, start to get a little bit of rebound. The RSI MACD is already really oversold, so wouldn't be surprised to see a bit of a momentum back up for Tesla. And of course, if it does end up coming down here further, 145, 146 is going to be that support level to watch. Talking a little bit about NVIDIA. NVIDIA on the day, 1% green. Once again, buyers stepping in. I have never seen so stubborn buyers of any stock, really. I mean, every time it comes down to that 21 EMA, buyers are reluctant, and it actually got saved by Microsoft and Meta on a Tuesday before the earnings. It was selling off. It was down almost 3%, broke down. This continuation should have happened, but then Microsoft reports earnings, gaps up the entire Nasdaq, and so does Nvidia. And then today, Meta reports earnings, gaps up the entire market, and increases that momentum to the upside even further, and Nvidia saves again, or survives again. So what we're really seeing is that 21 EMA acting as a very strong support, but also a little bit of some support from other companies, really keeping Nvidia at these valuations. And again, it's gonna be game time next week when these companies report earnings. AMD is also next week along with Apple, and I believe Nvidia is going to be later, not next week, but even later than that is when they are reporting. So they're reporting at the end of May, but eventually we're going to get a good understanding on what they're actually made of and what's all the hype about. So of course it's all about AI, but it's time to show what NVIDIA is going to do with the numbers. So anyway, we got AMD here in an uptrend, higher highs and higher lows, getting a little bit of a bounce. RSI MACD are starting to become a bit on the oversold side, so it's not a surprise to see a little bit of momentum back up. Ideally, this right here would be a much better support at roughly $76, $77 for AMD, and resistance all the way up to as much as 101 to as high as $110, $111 for Advanced Micro Devices. Talking about PayPal, and PayPal here on the day was also up over 3%. So once again, getting some momentum back up. Buyers are stepping in. Volume was pretty good, so back over $74. And this right here is going to be that lower high for PayPal. That's the one to watch. Of course, resistance all the way up to as much as $87, $88 per share for PayPal. The support level is going to stay put at roughly 67. With my fair value, it's $70 per share. Talking about Square, and Square here on the day also flat, not really moving all that much, but it actually came down to 58.91, perfectly validating the support that we've talked about on the channel for Square, and then getting bought up. So flat on the day. There's going to be an opportunity, in my opinion, for a potential swing trade on Square here, considering how much it's been selling off, lower highs and lower lows, and they are reporting earnings next week. So we got PayPal, we got Square, we got Apple, we've got AMD, we've got still a lot of companies reporting earnings next week. So support level is going to stay put here. And of course, a much better area of demand at close to $50, $51 with a resistance all the way up to as much as $83, $89 per share. Talking a little bit about Meta, the winner on the day, up a little bit over 13, almost 14%. So a bit of a doji candle, right? So red candle on a green day, a little bit of selling pressure intraday, but again, it was very much back and forth. It held up really well. Support level we talked about was 236.88. It came down to 236.77. So we're off by 11 cents, right? Very, very nice validation here for Meta. So again, we've got a big gap to fill now. Well, we've got gaps all over the place for Meta. So not only this right here, this is a brand new gap that Meta needs to potentially come down to maybe fill in, but we've also got a gap to the upside that Meta needs to get up to and fill in all the way up to $290. There was a lot of upgrades on Meta today, all the way up to $300 per share with buy ratings, overweight ratings. Analysts seem to really loved the numbers reported by Meta. So support level is going to stay put at roughly 236, all the way down to as low as 222, and resistance we've got and a gap to fill at 290 to as much as $300 per share for the company. Talking about Netflix, and Netflix here on the day up over 1.4%. So not a lot of momentum, not a lot of volume here for this company, mostly just consolidating sideways inside this symmetrical triangle, so lower highs and higher lows. And we continue to trade in this range, really. I mean, eventually there will be a much bigger price action or much bigger move for Netflix as we break out of this range, this symmetrical triangle on higher volume. And then we can kind of formulate a trade depending on where it moves to, right? If it gets up to 380, that's going to be a potential short. If it comes out to 275, 276, it's going to set us up for a nice reversal swing trade for Netflix. Talking about Google here, up over 3.75% on the back of Microsoft and Meta and all these different companies pushing higher. So entire big tech, a very strong move, and resistance is going to stay put at $109, $110. So that right there is going to be that level to watch all the way up to 123. And support level is going to stay put at about $101 per share. So those right there are going to be some levels to watch for Google moving forward. Right now, we're seeing a lot of consolidation. A breakout past 109 is going to be very, very important and crucial for Google. So if we do see a breakout past 109, maybe tomorrow or next week, that's going to be very positive for Google to see that more upwards momentum. Talking about Microsoft, and Microsoft absolutely crushing it, going higher over 3.2%. Market cap's now $2.26 trillion. Apple market cap's at 2.665, so Apple is still the leader. Microsoft here getting a lot of momentum once again, and resistance going to stay up at $312. That's going to be in line with this resistance from back in March of 2022. And Microsoft on the year is now up over 25%, doing really well. And that is going to be that resistance at 311, 312 to watch for Microsoft. And last but not least, we got Shopify. And Shopify on the day, very, very flat, up over 2.6% though, and getting validated at this higher low. And support level is going to stay up at $41, $42 with a resistance all the way up to $54 per share for Shopify. So hope you guys enjoyed this video and a complete update on the markets. We did see some good economic data resulting in the markets feeling a little bit more optimistic than usual. And of course, on the back of Meta, Microsoft, Google, all of tech really, we had lots of momentum. And other companies, gotta give credit where credit is due. Other companies also reported some good numbers. Numbers as in on a more relative scale, because the earnings expectations were so low that they came in as beats and huge surprises. But really, if you look at it year over year, we're still, lower or declining earnings on a year-over-year basis. So again, hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. 16% annual discount available till the end of this month. And as always, happy investing. I'll see you all in the next video.